Hello, this is Keith Schneider, CEO of MarketGauge.com, and this is September 23rd edition of Market Outlook. So you had a relatively docile week with the exception of some news hitting the market in the gold market, which jumped it up pretty good on Friday and then came back to earth. So we're going to review the markets. You got some interesting non-confirmations, which I mentioned in the newsletter this morning. And so we'll get to the charts in just a moment. Please be sure to vote in our investor sentiment survey and help us and help you come up with some interesting sentiment figures, which of course we report to you on a weekly basis. So first of all, let's take a look at the Dow. As you can see, the Dow has sort of punched through and consolidated on the upper end of the channel, this weekly channel here. We're also, bumping up against the all-time highs. We're neither overbought nor oversold on a weekly basis, so there's plenty of room to move on either side. Now, of course, you can see that the 65-week, the 200-week moving averages, they're stacked, sloped, and moving strongly to the upside. So the momentum is there. But let's go down to the daily. So it was interesting. On Friday morning, we sort of gapped up and closed on the lows. So you've got this interesting pattern here where we have a lot of compression. We actually closed probably marginally down on the week, not really much. So the idea here is you've got this compression for the last 1, 2, 3, 4, 5, 6, 7, almost 2 weeks or so, or 8 trading days after the response to QE3 announcement. So interesting. If we can take out the lows put in here on Thursday of this week, that's a cautionary area. Of course, we have lots of support just under the market, and I would look for it. Let's see, this trend line is got moved, so we're sort of bumping up against this outer end of this channel here. So what we would do, we would be looking for support certainly at the old highs that were breached back in May. Those are the highs from May of this year. And so support along with this rising 50-day moving average on the daily is the ultimate area where I would see a successful test. But first test, if we do indeed get a sell-off through the recent support level, which is around Thursday's lows, look for it to sell off another 2 or 3%, possibly down to the 133 level, and ultimately finding some support there. So well intact. Let's take a look at market sentiment. This week I'm going to switch the charts and look at something that you can actually trade. This is VXX, so this is the S&P 500 short-term volatility. And as you can see, again, we had actually got through the bottom end of the Bollinger Band and then popped through, failed again. So the sentiment right now is running in the middle of the band, so that's positive, although we did have a test, and sometimes it could take at least a week or two. So if we don't get a response in the next couple days, the signal that we got down here in early September would have been negated. Now this is the VXX, operates a little bit differently than the cash index of this, which is $VIX.X. So this is calculated in a slightly different fashion, looking at a different series of options still on the S&P 500. Now this particular index that we've been tracking all along definitely did not give us any signal, and again is basically consolidating at this relatively low level, about 14%. It's quite low, but still now when you adjust the volatility bands, the Bollinger Bands, we're not at any extreme. although from an absolute level, we're scraping along the bottom here, even as the market makes new highs. So it looks like the sentiment is basically stabilizing here and not dropping any more as the market continues to move higher, which is a bit of a flag, but not quite a signal. So something to be cognizant of and to watch. We got the 50-day moving average declining, so certainly you can see a pop even on a short-term, any short-term correction up to the 16, 17 level in a heartbeat. So again, trading at the lower levels, sentiment is really in a positive mode here. And the same thing can be said for the weeklies. You can see the weekly charts here, again, mirroring what the daily is. We're beneath the 200-week moving average, beneath the 65-week moving average, and again, just trading in the middle of the Bollinger Bands and not indicating excess exuberance. Let's take a look at the transportation averages, the one that we focused in this week's text in Market Outlook. So as you can see, a couple things. Number one, you had high volume this week, lots of volume, and to the downside, we also broke the 65-week moving average. Now we've sort of been trading, as you can see, it's really worked quite nicely, this moving average right here. But over the last couple months, we've sort of been hovering around this moving average. But this week, we closed decisively on good volume beneath it, okay, which is not a good sign. We really need to get above the 95 to 96 level to take out the recent highs. And let's take a look at the daily channel, which also is at an interesting point, because this week we broke down decisively on massive volume through the 200-week moving average and the 200-day moving average and the 50-day moving average, also now trading decisively under the 200-day, and we broke down. We should have some support around the 85 level here on this this channel. But meanwhile, the market can continue to move higher, but it definitely calls into question the duration or the strength and the continued move to the upside in the market. So there's definitely a cautionary flag here. Transportations are indicating a bit indicating quite a bit that the economy is not that strong. The need for QE3 is, what Bernanke was partially looking at. Obviously, this part that indicates commerce, the transportation sector, definitely running into a headwind. So the question is this going to turn around, or is the market rally will eventually hit a peak, maybe in quarter one or sooner, or quarter two? It remains to be seen, but I definitely have a cautionary flag in the back of my mind about long-term holdings and a potential for a significant reversal if we can't really improve here. So let's take a look at gold. Gold, as you see from this daily chart, has a couple of interesting things. One, we hit a new high on Friday, sold off, closed in sort of the mid-third of the range, and you've got this very, very accelerated trend line, but it's a good one. So if we can take out 170, definitely a potential correction down into the support area around 163. In addition, let's take a look at some of the monthly and weekly charts. You can see that we're bumping up against some resistance on this long-term trend line that I've been referring to for quite some time. So if we can punch through here, this will be a critical resistance level. As you can see, there were a bunch of spikes in here. Let me illuminate that on the monthly charts. So we're definitely approaching a critical level here, this level of resistance just above the trend line and the peaks going back to the middle of 2011 are important, right? So the coincidence of this return move, if you get much beyond this trend line and these highs, we're definitely on the way to all-time new highs in gold. Also, let's take a look at some of the market internals. You can see from the market internals, the intermediate turn McClellan oscillator finally got to overbought, sold off this week. We're definitely on a sell signal here. So on an intermediate term basis, market internals running a bit frothy. In addition, the market internals on a shorter term basis, looking at advanced declines, we got pretty rich. We're starting to hit the level where we would be indicating a sell signal. Up-down volume already has indicated a sell signal. So definitely we're indicating some overbought situations, which we've now hooked down, which can generate the sell, which has generated a sell signal. So overall market momentum is still in place as we explored the Dow earlier, but market internals are a bit frothy, and also, right, the sentiment indicators still positive, but interestingly are diverging, not moving any lower as the market moved higher. So let's be cautious. Let's make sure that we watch this little compression area, see which way we break out. For the shorter term traders, there's opportunities on both sides, and let's take advantage of that. Bye for now. This is Keith Schneider, CEO, MarketGauge.com. This is September 23rd edition of Market Outlook. And again, I want to remind you, please participate in our investor survey. The more people that participate, the more valid the results are. We've gotten some very interesting results already, and so we appreciate your participation. And again, we will send you the results midweek as to what the sentiment is. Thanks, and bye for now, and have a great rest of your weekend.